Example 8, the scenario indicates that the investor holds 35%, 3 other investors each holds 5, 5, 5, and then the remaining 50% is held by quite a few, numerous other shareholders, none of them owning more than 1%. Now our first question, the size will not give the investor a right. The size is 35%. Is there a separate arrangement? None, which we are able to identify. Then they indicate to us decisions about the relevant activities of the investee require the approval of a majority of votes cast at relevant shareholders' meetings. 75% of the voting rights of the investee have been cast at recent relevant shareholders' meetings. Now, it indicates to us that 75% of voting rights have been cast at other meetings. Now, if I just take this one step back, and let's just use normal terms. The MOI of this company, Memorandum of Incorporation, indicates to us that of all of the shareholders present in a shareholders meeting, when decisions are made, 75% of all of these shareholders should vote. Now, in a scenario, you will have to read very carefully. They can indicate to you, based on history, our investor with 35%, if we are able to identify, let's say in year 1, year 2, year 3, in year 1 of all of the shareholders present. Now, if we say, for example, now just listen here, if we say, for example, only 50% of the shareholders were present for the past 3 years, but each year our shareholder with a 35% were present, and our shareholders with a 1% were present, therefore 15% individual shareholders, each owning 1% only. Okay, you with me? Therefore 50% of the total 100% has to be present, and of this 50%, 75% of every shareholder present should vote. And each year, 35% shareholder, which is one entity. Therefore, if we look at this, 35 over 50, 50 will represent 70%. You will have to read the scenario very carefully, because if you now look at this, it indicates to us in terms of our MOI, 75% will have to vote in terms of everyone present. Now, if only shareholder 35% vote, 70% will vote. Now, if they indicate to us that they have approved these votes, then we are able to conclude that there will be power. But if they indicate to us that these votes decisions were not approved, then there will not be power. You will have to read your scenario extremely careful. If we change the scenario a little bit, and let's say, for example, that our shareholder owned 40%, one shareholder owned 40%, and this will then be 10%, 40 out of 50 will then be 80%. Then it's easy. This will be, yes, there will be power. Because based on history, we were able to prove that this shareholder were able to make the decisions at the meetings.